Hello, trading is closed on March 15th, 2022. Let's do our disclaimer, go over our calls, and then make some predictions. It's my trading plan for Wednesday, March the 16th. Remember, I can be completely wrong. Any trade should be at your own risk. Look for the pattern with the early high, which is this. Tomorrow has the early low. Today's call was a miss. It was a miss for two reasons. One reason is there was a target from yesterday's pattern right here, and I just missed it. Somebody emailed me and pointed it out, and he was correct, and I'm not perfect, and I missed the target. The other thing is one of my most reliable patterns did not work. We had a normally bullish pattern closing near the lows, gapped up, higher highs, closed under all these lows. We gapped up. We didn't clear this high early. That's almost a given. You're going to trade lower, but it didn't happen. So I missed the target and the call failed. That's the way it goes sometimes. This is what we said. We gapped and overtook the high. It just wasn't prompt. I'm going to go over today's patterns, but please, there's a special presentation again from David. He's going to explain yesterday's opening pattern. He has his own system, and it's worth learning from him. So be certain that you click on that later on today. Okay. During the day, MEJT said this drop wouldn't stick, that price would recover, and they did. Well, tomorrow's going to be tough to predict because it's an FOMC day. Typically, not much happens before the meeting, and then you get wild swings that I really can't predict. But let's pencil some things in and see if it helps us. I may not act on any of these. Here's so I'm counting this. We have an ABC down. I don't know what the degree here is of the ABC, whether it's black or red or what it is. But we're going to, I think, make another ABC, and then the decline will continue. So let's just focus in on this area. Here's the low. Here's what we have so far. And now we're going to magnify everything that's happened since the low. Well, here was the low. Here's what I call a leading diagonal triangle. These things retrace, and the target of the retrace is the origin. That was met here. So we've already played that out. Now this should be a wave A. We should have a retrace for B, and then we should be in wave C, and the decline continues. And then the question is, how do you count this? Now over the weekend, I had an ABC for B, and I was looking for a strong wave C up, and that didn't happen. But if that's the right count, which we don't know, there should be a wave C in here someplace. Now I can make it end here. It just looks kind of a forced count to me, and forced counts are usually wrong, but I can count 5 waves up. And if you measure from the start of red A to the end of red A, and then measure from the start of red C to the end of red C, that's 0.618 on the nose, and you have an ABC with C equal to twice A. That doesn't mean it's the only way to count this. Frankly, it looks a bit forced to me, but if it works, it's a pretty pattern. We'll just keep in mind that if we do drop right from here, which I can't say we will, but if we do, I can explain it. Well, tomorrow's pattern has the early low. It could still gap up. Typically, it's a rally day with a fine lower high. If it's weak, more weakness follows. If the FOMC report comes out tomorrow, typically it leads to wide swings. I just don't have a good method for predicting what happens during those wide swings are usually too big and too fast for me. My count has us in the wave C up. If it hasn't ended already, I suspect it will end soon and another decline begin. And the other possibility, of course, is that the count's wrong. You never know. I usually don't trade on FOMC days. It's just too risky for me. But when this leg ends, I expect the decline to begin. And if we just keep going up and up and up, then my count has to be re-examined. But until that happens, I'm going to stick with it. So tomorrow has the early low. This is one candidate for the end of the rally. It certainly isn't the only one. Wild swings after FOMC. And when this leg is over, we don't know when that is for sure. This is just one candidate. When this leg's over, I think there's much further to go on the downside. And that's today's call.